I'm so glad that Katie said yes to this because, I mean, Katie, I think, is on everybody's wish list because she's so interesting, and also just such a sort of prominent supporter of crypto. I think most people probably know your background a little bit. I don't know if you want to maybe talk like for a second about the 11 years you spent working for the Justice Department tracking bad guys, and even sort of interestingly finding two bad agents. You were looking for one, you were investigating one, thinking that somebody was setting him up, and it turned out that you found two people that were not even working together, which you said was very unusual for a federal agent, or longtime federal agent. Anyway, so then Katie was working on cryptocurrencies and developed one of the first cryptocurrency task forces for the nation, and in the process met Brian Armstrong, became a board member at Coinbase, and that's where you met Andreessen Horowitz as partners, and they smartly brought her aboard soon after that. So there's so much to talk about, but Katie, I think the one thing that has really defined 2021, aside from like a lot of terribleness, COVID related, is NFTs. Everyone's still trying to understand NFTs. Your firm has made so many interesting bets, including recently, including Axie Infinity, where people are breeding these little Axies to sell them for money, mythic games or mythical games, and of course Dapper and OpenSea. So what is the through line? When you're talking to your LPs and you have to kind of dumb it down for them, how do you explain it, what you're looking for exactly?
Well, thanks for having me, Connie, and good evening, everyone. Can everyone hear me? Okay, great. As Connie alluded to, I was a federal prosecutor for over a decade with the Justice Department. Mostly, I wasn't prosecuting crypto crimes, though. I was prosecuting organized crime, murders, gangs, and the like, when I was asked then for a change of pace to come and try and shut down Bitcoin, which sounded like a great idea until I learned about it and what it was and how it was a technology. And like all technology, it could be used for bad and it could be used for good. And I think this was an important thing to realize right off the bat. And I think that's true of all technologies. What I saw was just an overwhelming potential as I learned more about it for good. And the case you mentioned, I'm glad you did, the corrupt agents on the Silk Road Task Force, I can tell you all that but for the blockchain, they would still be federal agents today. The only way that we were able to catch them was because of this open, transparent, distributed ledger. And that really sent me down the rabbit hole early on. And this was 2012, 2013, into, wait, I keep hearing this is only for criminals, but actually we can use this. And so I came from that point of view of this was bad technology and then came to see how good it could be used. I think when you talk about NFTs, let's take a step back. I think I was very focused on NFTs some time ago. And in fact, our firm made its first NFT-related investment in Dapper Labs in 2017. When everyone else was focused on the prices of Bitcoin or ETH, we were focused on infrastructure and what would be needed to create kind of a better ecosystem for digital goods, for digitally scarce goods. Of course, in those days, NFTs was really just CryptoKitties. And the team behind CryptoKitties, Dapper Labs, turned out to be the team that created Top Shots. And so we're proud investors in 6 rounds of Dapper Labs, including all 6 rounds that they did of financing. I think, so we long ago saw the potential for NFTs. Why are they special? I think fundamentally, NFTs are going to dramatically change the business model for the internet, for consumers and content creators. And let me tell you why. You said to dumb it down for our LPs. Our LPs are very educated, smart people, but like many, we're at a point in the space where people are really focused on the technical guts of everything, and they feel like if they can't grok everything about the technical aspects and the protocols, then they just don't get it. And I try to tell them, well, do you know how TCP/IP protocol works? Invariably, most of them say no, but yet they all know what email enables and what email can do. So I'll speak at that level with respect to NFTs. We think of NFTs as just, I like to call them digitally scarce goods. Why is that important for consumers? Up until now, digital goods that you might think you own because you paid for them on a centralized platform, whether that's Amazon, your Kindle, maybe you bought the movie. If any of you have children, you've bought the movie Frozen sometime, or other movies. Where does that content lie? You don't own it, but you paid for it. When you buy something physically, you own it. When you're done with it, you can do with what you want. You could throw it away. You could lend it to a friend. You could sell it or resell it. Digital goods before the concept of NFTs or digitally scarce goods, you don't really own. Only a centralized gatekeeper owns. So really, NFTs fundamentally unlock the possibility for consumers to actually own a digital good. And I think we're just starting to see the beginnings of this. Why is this important? That's why it's important for consumers. You can all of a sudden maybe take something, we talked about video games, Connie, and right now if you buy a Fortnite skin, what if the game goes under? What if a different game is popular, but yet you've spent money on that skin? Well, what if you're a gamer and you can take your good to another platform? You can use it anywhere. That's really powerful for consumers. It's putting power directly back in the hands of consumers, and I think a really exciting way. But it's also great for content creators, because unlike middlemen who take 30% today, and content creators really don't get a huge percentage of the content they create, they can program these tokens, these digitally scarce goods, to get financial upside in all future transactions. All of a sudden, imagine what that does for the creator economy. And this, we started talking about NFTs with just digital art, but it's much broader than that. I mean, one of the things I think about when I think about NFTs is what's the next thing? Whereas last year at this time we were talking about NFTs, I think next year at this time we'll be talking about music and what barriers can come down in the music world. So.
There's so many. I mean, like you said, it was crypto kitties, and everyone was very dismissive. You know, Andreessen Horowitz has money to burn. You know, haha. And then Dapper Labs, so interesting. It's blockchain underneath Flow, which I think is going to become so important. And like you're saying, now NFTs are giving creators a chance to own much more than they ever have before. I am just wondering, so as a high-profile investor, though, how do you must be getting hit on all sides by people with sort of related ideas. So I just wondered, just in terms of, because a lot of people see what you guys are doing and want to do that as well, how are you sorting through your deal flow? I talked to your colleague, Ariana, recently, and she talked about like crypto Twitter and Discord. Beyond that, though, how are you what are your filters for some of this stuff?
Well, in terms of deal flow and then what we look for, I think those are two different things. So let me address deal flow, and I think you're asking about both of them, right? In terms of deal flow, look, we sit at, I think we're very privileged to sit at the pin, like right at the center. We have a front row seat in the ecosystem, and that's because both Chris Dixon and myself were on the board of Coinbase for many years. Now, I've re-upped my board term, and I plan to be on the board of Coinbase for several more years. They have Coinbase Ventures. And so really there are very few crypto projects out there that also don't go to, we don't like to use the word pitch, but for lack of a better term, pitch Coinbase Ventures. OpenSea is another board that I'm on right now, and they've done record volumes, and they're the largest NFT marketplace in the world. They also, are doing venture investing. So right there, just through our connections to these kind of giants in the space, we have deal flow that way, because they're seeing deals, we're seeing deals. But then, of course, crypto is very global. And I think one of the things that we've had to do at Andreessen Horowitz, which was very focused before the crypto ecosystem, and I think this sets us apart as a fund within the firm, is, it's all Silicon Valley, maybe New York, sometimes Israel. We are global. We are truly global. And I would say at least 50% of our investments in this last crypto fund have been international. Yeah. And I think, so we have to just not sit back and rest on our laurels of, we're on the board of Coinbase and OpenSea. We have to be really open-minded about different projects in different countries. And, you mentioned, Connie, Axie, another gaming investment, YGG, many others. These are all international plays in places like Vietnam or the Philippines. And so I think one thing we need to do is be incredibly open-minded. And how do we sort through deal flow? How do we get deal flow? I mean, we work a lot with small funds that are really crypto native funds. So that's another way. And we try to cultivate our reputation, I think, as helpful investors and more than just capital in places like Berlin, where there's an active ecosystem, maybe in Brazil or Latin America, obviously in Africa. And even now we're starting to see things in the Middle East. I know I'm leaving out some geographies, but we truly are really all over the place. We just did a investment in Australia. And so it's hard because if we're not there physically, it is hard, and it requires us to go get on a plane and go try and, they've never heard, many of them, of Andreessen Horowitz. I think we take that for granted just being here, but they've never heard of Andreessen Horowitz. They don't know our value. So one thing that we try to talk about is what we do in terms of when we make an investment, especially in crypto. Crypto, the ethos of crypto is decentralization, and yet we want to maximize for our LPs ownership. So how do we do that? One of the things we've done is pioneered a delegate program where we delegate our stake and proof of stake systems to participants worldwide, whether that's NGOs like Kiva and Mercy Corps, whether it's companies like Deutsche Telekom, or indeed whether it's universities, like right here, we have Stanford and Berkeley, many other universities around the world. And so we're trying to expand our footprint of delegates globally to just be relevant in the ecosystem. There's Technion University in Israel. They have a great computer science department. I mean, and places like this all over the world. So we're really trying to, again, not rest on our laurels of because we've had great deal flow, it will continue. The marketplace for crypto investors is widening for sure. And in terms of what do we look for? I'd say we look for the same things we look for in traditional venture investments in terms of team, TAM, all of the things that many traditional venture investors, and I know there are many of you here, look for. But we add 2 additional categories. One is very important to us, and that's what's your plan for regulatory compliance? It's no secret that the rules of the road for crypto in this country and in many countries are really unclear. So we want to know, what is your plan for compliance? Even if you don't have all the answers, what do you think? Who do you think your regulators are? So that's one category that's a bit different, I think. And then another, just because other sectors, the rules of the road are a little clearer. And then the other the other second category that's a bit different is what we call token economics. We're investing now, I would say roughly 75% of our current fund is in tokens, not equity deals, which is pretty extraordinary. Also with our second crypto fund, heavily biased in favor of tokens. And so we look about token economics. Is this a project where they're keeping 95% of tokens on their balance sheet? We probably don't think that's a good idea. We don't think that's going to drive community engagement in a kind of go-to-market fashion. Are the founders keeping all the tokens for themselves, or do they plan to, for example, airdrop 40% to the community to kind of bootstrap the network? So that token economics category and that regulatory category are 2 things that I think are really important. So hopefully that answers your question.
Evolved, because a couple of years ago it was more like you structure a deal by you start off in a kind of a traditional sense, you buy equity in the company, they build their product, and then they sort of open it up to their community and sell tokens, and then you have sort of a proportional amount of tokens based on your equity. Did that change because communities were like, I don't want to get involved in a company that has these VCs behind the wall essentially? Or I'm just wondering how that happened. And also, you and I had talked earlier this year, mentioned that a lot of this is just over the counter, which is sort of shocking. So how do you, I don't understand. I mean, are you getting like preferred rights, or what's the advantage to being in your position?
Well, if you know an over-the-counter desk that will give me preferred rates, let me know, because I haven't found one. So the over-the-counter, no, we're just buying at spot. We get no special treatment. And in fact, if anything, we have to have kind of things like a lot of venture investors don't have to think about, like best trade execution, entering into a position, because we don't want to move the market on ourselves. And we're making large bets, right? I mean, we're writing checks. I mean, we're making $50, $100 million investments in some of these tokens. So we're very conscious of not moving the market. Where it's a true over-the-counter and the founder of a protocol might not even know we're an investor, we just go to we'll go to a series of OTC desks and we'll get bids. We get no preferential treatment at all. Other cases, sometimes protocols will want a particular venture capital investor, although that is changing, actually. I think it's changing a lot and rapidly, and we need to be nimble and account for that. But what we've done in some of those cases where a protocol founder really wanted us to be involved is, early on, call it 4 years ago, 3 years ago, in the token environment, they would give us a discount. That became very unpopular in the crypto ecosystem. It was very at odds with, why should VC investors get a discount over the community? So how did we address that? One of the things we did is give us a lockup then. Give us a lockup we're 7 to 10 year patient investors. We're not running a crypto hedge fund. So why don't we, if we want a lower price, maybe call it a 20% discount, in exchange, whereas the community can freely trade their tokens, we can't. We're locked up for, in some cases, 4 years, even longer, and sometimes shorter. So that's one kind of innovation that we brought, is the lockup. idea to different token deals. So we have received discounts sometimes. I think the thing is that we have also done a lot of work for some of those protocols. Where we received a discount in exchange for a lockup, by the way, we've also helped those protocols scale in terms of talent. They need developer relations folks. They need to spread the word in terms of community involvement. And we've certainly, I would hope, have been helpful there. But and then we also do equity deals. And Chris and I sometimes joke about this because he says, we don't do equity deals. Well, I still do crypto equity deals. So please, if you hear of any, send them our way. OpenSea, I remind him, OpenSea was an equity deal. We led their Series A and their Series B. Coinbase was an equity deal. So I think that we don't like to take a one-size-fits-all. I'm very much agnostic, and I think the team is also, about whether or not value will accrue to a token, value will accrue to a company. And just like crypto is very innovative, deal structures in crypto are very innovative. So
interesting that you're helping with developer relations and that sort of thing, because I was wondering if your agency model is applicable and helpful in this case, and it sounds like it is. Okay, Katie. Oh. This really stinks with the wine microphone. I did want to talk to you again because I think so many people are watching, because there's so many people, you just know so much more than other people. And so I wanted to talk to you about, you kind of talked about this a little bit, but I still think NFTs are seen as sort of ostentatious. We've seen in the headlines so much money spent on like a digital thing where, so many Americans are struggling, and people are wondering, okay, these are interesting, but is it for like a really small group of people? Like, how do these benefit society?
It's such a great question. I think it's really important with NFTs not to judge the current state of innovation by the end state of innovation. And so I completely understand what you're saying, and I've seen it myself. And I yet see excess in terms of status symbols in the physical world too, where many Americans are struggling, others can afford luxury vehicles and Rolexes. So I think the digital world is no different. But like there are luxury physical goods, there are also basic goods that people want to own in the real world that aren't ostentatious. And I think you'll start to see more of those develop digitally. Where I'm really excited is around music. And let me give you an example. One of the things I think is so democratizing about the space, and we're still early in it, so it's not, I understand what you're talking about when we read about people sold a piece of digital art for $69 million. But for every headline like that, I'm starting to see projects that are really very passionate about democratizing participation. And let me tell you just an easy example. Billie Eilish, right? She was kind of discovered on the internet. She was discovered by a group of fans on the internet. And yet those early adopters, her really true fans, her early people that made her famous, did they share in her stardom? No, not a bit. In fact, not only did they not share in her stardom, their experience was worse. As she blew up, their experience was worse. Why? Well, because now ticket prices went up, because now she's famous. The lines got longer. The stadiums and concert venues were sold out for her, even though those were her earliest true fans. But imagine if the people who discovered her and made her what she was, early days, or future Billie Eilish's, and by the way, not just music, but in terms of all kinds of content creation, what if they, through an NFT or a smart contract, could have held something that related to Billie Eilish's success? Whether that's a piece of, it could be an early fan club. It could be that she records a song to Spotify, but then creates a companion smart contract, NFT, that entitles fans to special access to shows forever, or to tour with her maybe, depending on when they discovered her, or perhaps entitled them to future portions of her royalty stream. Now, all of a sudden, these fans share in the economic upside instead of just record labels and lawyers and middlemen. And by the way, it's also more democratizing for the artist or content creator. You don't even need to become as famous as Billie Eilish to have a passion, and yet you need to make a living. Take Billie Eilish, as famous as she is, she doesn't garner the most of her earnings. Record labels still do. And that model has been around for decades and decades, and we think it's high time that it ought to change, and we're starting to see some beginnings of projects that aim to make that change. And some very well-known musicians think this is really much needed, and they've already made it. They also think it's interesting because they don't even know who their early true fans are. They have no idea. But you can imagine that for business models, especially ones that revolve around merchandise and other kinds of things other than just songs and royalties, they might want to know who their earliest true fans are, who their diehards are. And my partner, Chris Dixon, wrote a blog called 1,000 True Fans, and I think it sets forth this phenomenon. But I think that what you describe early days as ostentatious also really, just like I was told Bitcoin was bad and it was criminal, and I discovered, okay, criminal uses, part's bad, but overwhelmingly we're seeing a lot more useful cases coming out of crypto. I think you're going to see that with NFTs too.
It's great, and I didn't really realize just how sort of like the streaming services had so eviscerated the income of musical artists, especially. But one thing that I do wonder about is, like when Twitch's numbers were leaked, it showed that something like 1% of Twitch streamers still accrued half of the sort of earnings there. I just wonder if we're going to kind of end up seeing the same economics. Of course, the artists will still be getting more of the money. The middlemen will still be gone. I mean, it's still a net benefit, I guess.
I think so. It's still very early days for these business models. And by the way, the music business model I just mentioned, there are plenty of companies working on this because we think it's a very big opportunity. And so accordingly, there are a lot of other entrepreneurs who think this is a big opportunity. And each of them have different business models. So I think the jury is still out on what is the winning business model, both from an investor perspective, but also from a consumer or an artist perspective. I think one thing about crypto architecture, distributed systems, is that you can make a living, and we've seen this with NFTs already. You don't have to be Beeple and get really rich to make a living. In fact, I own a couple NFTs and I own by male and female artists, but there's one, and she quit her job and she programs digital art. I have two, and they were not $69 million Beeple style. They were actually bought them on OpenSea, and she has programmed the smart contract that if I sell them to you, Connie, which I'm not going to do, but if I did, she would get a portion of that sale. And then if you turned around and sold them to an audience member and maybe they appreciated in price, she will in perpetuity get royalties off of that sale. Whereas right now she gets nothing if it's digital, if it's physical art, right? Once there's a gallery and the sale is complete, the artist's economic relationship with future holders of that content is diminished, or not diminished, extinguished.
I think that's interesting. When do you think we're going to see more of that in the sort of traditional art world? Do you think that they get it? I mean, is there sort of resistance to this idea? Because I think, I think artists love the idea of having, rights to their work in perpetuity, but I also think they're like nervous. We've seen a couple of instances like somebody copying or counterfeiting Damien Hirst's work, and so. So was my question. I guess just when are you seeing like these sort of smart contracts being adopted in the traditional world, or people sort of are you aware of the traditional art world embracing NFTs? Is this something that you're tracking? Is there opportunity there?
I can tell you that the boards of directors of Sotheby's, Christie's, all of these kind of large art, large names in the art world have all been definitely leaned in, and the management have been leaned into NFTs. And look, I think we'll go through fits and starts and also waves. I've been in the crypto ecosystem since at least 2013, then on the government side. And then, so it's been a long time, and I've seen a lot of waves in the crypto ecosystem. I think that will continue. We saw NFTs, really enter the mainstream this way, and they had not. Will there be waves of NFT activity? I believe so. So it's very possible that right now you see Christie's, Sotheby's, traditional art world players leaned in because they think they're seeing it on the cover of whatever magazine, or they're hearing about it, or they're hearing about kind of famous collectors getting into NFTs, so they feel like they need to. We'll see whether that sticks. I do think it will, but what I don't know is will it just continue to go up, and will interest continue to go up, or will there be waves? And the one thing I know about crypto is it's very volatile.
So it sounds like you're about to make some sort of music-related investment, if you haven't already. I'm just wondering, I have to ask, and I'm sure you're tired of answering this question, but I haven't asked you. You're on the boards of OpenSea and Coinbase. Both of them seem to be offering NFTs, or Coinbase NFTs are coming. How do you navigate this? These companies seem like they're on a collision course.
That's a pessimistic view, and I actually don't agree that they're on a collision course. Now, first of all, I'll say that what Coinbase's plans are, they haven't even announced yet. They've just only announced that they're exploring doing something in the NFT space, but we don't even know what yet it will be. And so I think, one thing that I remember Brian Armstrong said years ago when we started seeing competitors come into the exchange space, and I remember it was like Robinhood or who else, Square, a few others. And I remember Brian said, oh, well, this is actually great. And I thought to myself, what am I missing? And he said, this just means the pie is growing. And this just validates our whole thesis. This is a huge opportunity, and others see it. And I remind myself that. So I think that, look, the NFT space is so massive that I think there's absolutely room for many players. And I feel very fortunate to be on the boards of two really cutting edge companies that will play in this space. I don't agree that they're on a collision course. Certainly, if it played out that way, if the ecosystem evolves that way, that will be something I'd have to address as a former federal prosecutor.
And then we wouldn't see Coinbase potentially buy OpenSea? That could be interesting. I know you've got to get going. I did want to ask you, I interviewed another firm that you're sort of affiliated with, or I guess Mark and Chris had funded, SuperLayer, which is this new startup studio. And we were just talking about, it's Kevin Chu, who had previously co-founded a gaming company, Kabam. And he was just saying it's so hard to work with traditional VCs that a lot of crypto entrepreneurs are just not even bothering anymore. He's like, they don't know how to custody this stuff. It's a pain in the ass. So, he was sort of suggesting that, if you are not a registered investment advisor at some point, you're going to be out of the game. So I guess for the VCs here who are not registered investment advisors, just wondering if you've got any advice, is that the direction that they have to move in?
I think to hold tokens, and where it's unclear whether those tokens will be securities, and there's that 20% exemption, and that's an SEC-related exemption. I think when we were thinking about the first crypto fund, in an abundance of caution, and I hate those words, but in an abundance of caution, we just thought we don't know what percentage we want to hold in tokens, and so we will register as an RIA. And so we do think that, to hold tokens to the degree we want to hold them for a variety of reasons. And by the way, I should say, I think I don't think we actually hold securities, Gary Gensler. But but anyway, others might disagree. And, we want to make sure that we're following all the laws and the rules. And so, again, in an abundance of caution, we did register as an RIA. And I think that what you see is every single crypto dedicated fund is registered as an RIA. So I think, there are now many of them out there, and they've all registered as an RIA. So I think, again, it seems like a prudent thing to do where the regulatory status is so uncertain. If you want to hold tokens. We also see a lot of non-RIA VC investors, but what it seems like they bid on or try to win as deals are equity deals. As a result, by the way, we see the prices and the valuations going up a lot for those equity deals because the pool of potential investors are all competing for those. You mentioned Kevin. Kevin's a fantastic founder of Kabam, and now, but I wasn't aware of SuperLayer because I know of Kevin with Rally and yeah. Oh, right. Okay. Yes. And so one of the things I think when I talk to people like Kevin or other founders is the traditional services that Andreessen Horowitz provides, the kind of venture, the true venture side of Andreessen Horowitz, not the crypto fund. Increasingly, Chris and I were really finding we were not using those services for our founders as much. They don't need corp dev, really. They don't really need, capital network of how do we raise money, especially where they're tokens. They're already incredibly well capitalized to the tune of billions of dollars. What do they need? They need regulatory, policy, legal network help. Like, who should we talk to? So we can always put them in touch with people like that. Thoughtfulness on how does one approach thoughtful token economics design. They might want to talk about governance of decentralized systems. How should proposals come about? Should the founder of a protocol write a proposal, or should community member write a proposal? These are the kind of new behaviors. Of course, the things they do still really want in traditional services that the firm provides would be like tech talent, exec talent, because no matter centralized or decentralized, you need great talent.
Katie, thank you. There are many, many questions I could ask about regulatory stuff, but I know you don't want to stay all night. It's so interesting. No, it's so interesting. And I know that you've like developed this huge team, and I want to talk to you about, whether NFTs should be regulated, whether DAOs should be regulated. Oh, sure.
What I would say about regulation is, look, we think that regulation has a rightful place. I prosecuted plenty of consumer protection cases. So it's not that I'm against consumer protection. I'm all for it. Sometimes consumer protection goes a little too far, though. In 1980, the state of Massachusetts famously barred its citizens from participating in the Apple IPO because they deemed it too risky and the Wild West. And so they prevent, in the name of consumer protection. So what we want is fit for purpose regulations. What we want is, if I'm talking about a piece of digital art or like the World of Women NFT that Reese Witherspoon rocks on Twitter, why should that be regulated as a security? I don't think it should be. It's not a financial service or product, and I don't think it should be regulated as a security. And I think too much right now what we're hearing from regulators is financial services regulations must apply, but crypto's more than just financial services. So we want fit-for-purpose regulations. If it's a financial service or product, absolutely financial services regulations should apply, but where it's not, and it's often increasingly not, other regulations might apply.
All right, well, I'm not going to let you off the hook. I'm going to call you afterward, and we're going to talk about this for another hour. Katie, thank you so much for making time for this. So appreciate it. Such a treat. Thank you.